Just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intent. Good morning, guys. Today's update will be a quick one, simply because there isn't much new to cover. I'll just mark out our current trading range and update a few levels, which are the areas I'll be watching for the next potential continuation trade. I'm not looking for a regular day trade here, but rather a possible continuation entry if the move extends. Whether we actually reach that level or it gets front run is another story, of course. For the main trade, I'm not planning to add unless we hit that specific level. For day trades, I'll continue using small size, and if they turn into runners, great, but I'm not forcing anything here. For now, price made a new all-time high, and I took more profit from the longs opened at lower levels, as planned previously. Two of those positions are fully closed, and one is still running. For that one, I'm planning either to add to it or simply open a new position and let the current entry stay where it is. That's really up to everyone's personal preference. On this running trade, I already took plenty of profits, so I can use part of that to fund a new entry if the setup appears. The other trades, as mentioned, were closed on the way up. We didn't really get proper retraces on the move up, where I was previously watching for the mid-range level, and maybe now we'll finally get that level retested. If it gets front run, that's fine by me, since I'm still holding a position. But if price does come down, that would be the first higher time frame level I'll look for a retest. With that said, let's mark out a few levels and see what we have. Here we have a local range forming, basically a range inside a range. The mid-range is aligning logically with the local range low, and here we have a 3-day SR level as confluence, together with the range point of control sitting at the same point. If we look at the channel that is going up on Bitcoin's chart, we can see it's the midline of the ongoing lower part of the bigger channel. That adds extra confluence. At the same time, the daily EMA is slowly coming up to those levels as well. If we look at the yearly time price chart, we can see it's an S level based on the time trend line, and the simple SR levels that we had previously are all in the same area, around 116K to mid 108K. If we switch to the weekly or 2-weekly chart, we can see it's on both the upper part of the order block in case it goes deeper inside. Keep in mind, that's not a prediction, just what would look nice if a level gets retested. Simply a retrace into an SR level with confluences. That's where I would look for the next trade that I'd hold a bit longer, depending on how fast the target gets hit. This would be a good level to watch for a reaction, a potential end-of-wave scenario, or a market structure break, depending on what you trade and how you manage your risk. For me, I'll decide how to act when price comes down there. Not because I don't know what I want to do, but because I don't know in what structure formation will come down. Maybe it will be fast and I'll need to react quickly, or maybe price will range there first and I'll trade the local range SFP, or maybe we'll just chop down slowly and I'll average into a position. Whatever the case, this would be the level to watch. A lot of statistics I showed in the past worked out and price hit a new high, so the top was not in. As it stands now, there are no changes and no real top signals, not even a poor high at the top. So, logically, I want to trade the next higher low until proven otherwise. Now to risk management, what I don't want to see is price starting to close a weekly candle below this mid-range, or especially below the monthly open. Technically, the invalidation is a break below the last swing low, but closing a higher time frame candle down here would basically mean acceptance back into the range. And in the worst case, a new low, or just a longer chop around. So the invalidation needs to be wider, or it should be planned to de-risk when a higher time frame candle closes below this level. Either de-risk and make the position smaller to give it more room, then add back on signs of strength, mainly by reclaiming that level, or close fully and wait for a lower level or clear strength for the next action. The lower level would be the low of this channel or the swing low, and signs of strength would be a reclaim of that level. There are a few ways to manage risk and the trade. I'm looking for higher, so that will be my action zone. Now you also know the invalidation area, but how everyone manages that is up to them. I would most likely wait for a weekly close first, then de-risk a bit. Of course, on a successful trade, I'll take profit on the way up again. So far, we've kept winning the bigger trades. The streak is not bad. But at some point, there can be losses, and that's why I repeat, I'm not a financial advisor, and this is not financial advice. Now, the other scenario is if price front runs the level, or maybe makes a new high first and then comes down. For that, I plan to take day trades with small size. I already have one, and on the rise, I'll take profit if a new high is made. In that case, I protect the small position. But honestly, it doesn't matter whether it's big or small. Protection always needs its place, and taking profit on SR levels is important. If we look at the lower time frames, we can see we have an 8-hour order block here and the average loss level for today. That would basically be the front run level. I look at this price action as something similar to what we had last year. Here's the fractal, a potential range here and then a push up. From there, we could get another scenario. Either an SFP of the high, followed by a move back down into the higher time frame SR level, or something similar to last time, where we had a new high bearish divergence, but price simply made a higher low and continued up. We'll see how it plays out. For my local trade, I'll take profit on a new high, and if it first retests the lower level, I'll simply add to it. And with that, I'll wrap it up here. By the way, the copy trading is open, so if you'd like, you can join. Or if you want to learn more or just support what I share, you can join the Patreon. Until then, I wish you a good day and see you in the next one.